back to a new video. In today's video, I'm going to be talking about the 3 stages of price. As everybody knows, price moves in algorithmic ways to hunt out different things. So today I'm going to be talking about how you can capitalize knowing this and what those 3 things are. So the 3 things that price likes to hunt: external range liquidity. So external range liquidity is liquidity resting on external highs and lows. Internal range liquidity. Now, what is internal range liquidity? Internal range liquidity is fair value gaps. So that is 3 candle structures leaving a gap in the market full of orders, and price likes to come back to these to then send price in its favor. And the last thing is EQ, which is equilibrium. So that is when we're in overextended ranges, price loves to rebalance to the midpoint of the range just to tap into equilibrium, rebalance, and then it can move in our favor. So today I'm going to be talking about how you can see when price is rebalancing to equilibrium, hunting out external range liquidity or hunting out internal range liquidity. Now, knowing this, you will find a good narrative of where price wants to go every single day. So this is a very important concept to learn, and today I'm going to be covering everything you need to know about it. Okay, so diving straight into this, I'm just going to show you my first example, and what you can see here is we have this slight downtrend. So what is this downtrend doing? It is hunting out this daily gap. As you can see, we have closed perfectly respecting this daily gap. So that is our hunt on internal range liquidity. Now, where's our next most likely draw for external range? We have this external low here, and we have this external high right here. After taking out internal range liquidity, my best bet is that price wants to now take out some form of external range, whether it be this low or this high here. So let's just see what price wants to do now. Okay, so as you can see perfectly, price has taken out this external draw. So now it has tapped into an inefficiency, taken out external range liquidity, and it is in an overextended range. What do I mean by an overextended range? So as you can see, price has had a very volatile move to the upside of about 230 pips. So that is a very overextended range on the daily time frame. So my best bet is that price now wants to rebalance to equilibrium. We've taken out internal range, external range. Now the last step is equilibrium of the range. So what do we get? We then get our rebalance perfectly to equilibrium. So as you can see, this is how it moves in a very algorithmic manner, hunting out internal range, hunting out external, and hunting out equilibrium. Okay, so right here on the 5-minute time frame, I have a perfect example of how you could have used this 3-stage pattern. So what we have here is we have a range. So we have this swing high here and this swing low down here. What do we also do? We create a lot of low resistance liquidity below these lows here. So that's a great target for price. Price also rebalances to equilibrium and taps into the premium half. What else do? We also tap into the premium side of this fair value gap. Absolutely perfect. And we sweep external range liquidity. So where is the most probable place that price will now want to go? Price will now want to hunt out external range. After completing this model, the next step is into external range. And what do we have right down here? We have a perfect external range low. And as you can see, price came down, hunted this perfectly, and then just started to move away. So why was the draw on liquidity, this external range liquidity, resting below here? As you can see, price has met its 3 targets. It's rebalanced equilibrium, tapped into an inefficiency, and swept liquidity. But why did I expect it to come down to this low? I expected it to come down to this low due to the fact that all the confluences matched bearish. We have premium side of discount, we have a bearish fair value gap, and we have a bearish sweep on liquidity. So that is all leading me to believe that price is going to want to sweep out this low resistance liquidity and take out this external draw on liquidity. And as you can see, if you had have entered as soon as we got this liquidity sweep right here, which was the final stage, you would have had a perfect winning trade down to this low. So that's my example on the 5-minute time frame. Okay, so right here I have my bullish demonstration. As you can see, we've got our range here. We have our swing low to our swing high. This is a 3-minute example. As you can see, price has created a lot of low resistance liquidity again down here. After price came and swept out this low resistance liquidity, it also rebalanced to, it also tapped into a fair value gap. Absolutely perfect. And it swept an external low. So after seeing this, the model is now complete on the lower time frame. So now we can look for our next draws. where could our next draws be? Our next draws could be price taking out all this low resistance liquidity here and seeking out this high. Now, me personally, I wouldn't have targeted this high of the range. I would have simply been targeting a raid on this low resistance liquidity and then price to take out these equal highs here. Now, what do we get? After price rebalanced to equilibrium, we then dove into the discounted portion, tapping into a fair value gap and sweeping liquidity. So that is very bullish for me. And now I'm just looking for a bearish PDRA to get disrespected. And as you can see right here, we have a bearish 3-minute gap. As soon as we get a candle closure above that high, above that gap, we then enter the trade, stop loss below the recent low, and then we could have targeted these equal highs up here. As you can see, you would have another perfect winning trade using the 3 stages of price. So now I've shown you how you can use this on the daily time frame, the 5-minute and the 3-minute, just using a very simple few confluences and then a simple entry point. Now this is a very, very simple model. However, this can be extremely effective. I personally use this on the higher time frames and then look for my lower time frame model correlated to my higher time frame bias. So I'm just going to go over one more example. Okay, so here I am on NQ on the 4-hour time frame. And I've noticed this perfect range here. We have our swing low and our swing high up here. So I'm going to extend this out to the right. Now what does price do? Price has had a hunt on this low resistance liquidity resting below here. We have also swept out this external low, tapped into a fair value gap and rebalanced to equilibrium. So this is everything that we are looking for, and this all happened with bullish price action. So now seeing all of this, we would have simply been diving down to a lower time frame and looking for a potential entry inside this 10 AM leg right here. Now right next to that example, I have another example. Right here we have the recent swing low to the recent swing high, which was right here before the key reaction. So I'm just going to be dragging that out to the right. So our swing low and our swing high are here. What do we have resting below these lows? External range liquidity. Price hunts out our external range liquidity right here. As you can see, we had a perfect sweep on that. We also rebalanced equilibrium and we tapped into the discounted portion of this bullish fair value gap. So as you can see, we have tapped into all our key zones and now price has had its perfect move higher. So how could we have capitalized in this instance? We could have capitalized as soon as price tapped into this fair value gap, looking on the lower time frame for a lower time frame fractal model to then send price in our favor to take out this recent swing high here. So that is how you can use this with higher time frame narrative, seeing that the objective has been taken and then scrolling down to a lower time frame to look for your precise entry point. So these are the keynotes for today's video. Once price has finished the 3 steps with bullish context, the next highest probability hunt is on the recent external high, external range high, vice versa for bearish context. Price will always be hunting one of 3 things, whether it is external range liquidity, internal range, or rebalancing to equilibrium. This is what the 3 stages look like all together. So as you can see here, we have our range, we have our swing low to our swing high. We then have our external low resting here. Price then comes higher, hunts out our external low, rebalances to equilibrium and taps into a fair value gap. Then you can see this is all matching bullish context. Then we get our move higher to take out the recent external high resting here. So that is exactly how this model works. This model can work on the higher time frames, lower time frame. It is a fractal model, so it works the exact same on the higher time frame as the lower time frame. So that is going to be all for today's video. If you guys want to trade alongside me, I have a free live trading Discord. It will be linked in the description of this video, so feel free to join that. But that is going to be all for today's video. I hope you guys enjoyed.